All right, what's up, everybody? This is Faris Sleem, the editor of the Bowser Report, the monthly penny stock newsletter. Those of you who are longtime subscribers are probably familiar with this topic, but today I want to talk extensively about share structure, okay? Just going over 4 basic terms so that you get a good understanding of a company's share structure and how it relates to the investment process, okay? Before we get into those 4 terms, I do want to say real quick, if you don't understand how share structure works, right, I think you should even go further than this video. We're going to cover as much as we can. We're going to keep it nice and simple, but share structure is very relevant to the decisions that you make on a daily basis or weekly basis when you're investing in a penny stock, mid cap, large cap, whatever. Okay, it determines your entry and exit points, not the full trading plan here, right? But it determines when you're buying and when you're selling, right? It plays a role in the decision-making process, and it can also raise a couple of red flags about the company itself. Okay, so let's dive right into it. All right, the 4 terms that I want to cover are authorized shares, outstanding shares, float, and dilutive shares. I do realize that there are other names for these terms, but I just want to make sure that we're using the same vocabulary consistently throughout this webinar. All right, so authorized shares and outstanding shares, kind of 2 of the more commonly used terms that you guys are probably already aware of. Authorized shares are just the maximum number of shares that are issued here. Okay, so whenever a company goes public, or really even just charters, you have to define this immediately so that you can't dilute or really just issue shares further than this cap right here. Okay, so this is always going to be the highest number out of the 4 that we're going to discuss. All right, because this is the maximum number of shares that are issued here. Okay, so let's just say that this is company A, right? A hypothetical company that we're making up. So in this case, right, company A has 20 million shares authorized. Okay, so that's the maximum number that can be issued here. All right, the outstanding shares are the total shares that are held. Okay, this is commonly used on all of the investment websites that you're probably going to do your analysis, or even if you're just discussing stocks with friends. This is the most commonly used term, and it's actually pretty easy to understand, right? It's the total shares held. There's nothing too fancy about it. Okay, now let's say, again, company A has 10 million outstanding shares. Okay, this number always has to be lower than authorized shares, but it's going to be the biggest number out of these 3 categories, okay, at all times. All right, now again, we have 20 million and 10 million so far. Let's talk float. This is the 3rd term. Okay, it's kind of an easy concept, but I don't really understand how a lot of people overcomplicate this. I think it's because a lot of investors, especially active traders, like to justify a thesis for an investment, like a reason to get in, by saying that the stock has a low float, right? The higher the float, just to put this out there before we get into what it is, the higher the float, the less volatile a stock is. The lower the float, the more volatile a stock is. So again, when a stock has a low float, a lot of active traders and active investors usually use that to justify a position. All it is a basic understanding of the share structure, right? It's just a basic factor here. Okay, so the float are the number of shares that are available to the public. So this is what you and I are trading. Okay, this is what we're investing in here. So if I buy common stock of whatever company, right, let's say company A, then I'm pulling common stock out of a pool of 5 million shares. Okay, so if I buy 1,000 shares, that's 1,000 of the 5 million. There are now 4.99 million remaining. Okay, so the float is usually a much lower number, and there is no standard for a low float or a large float. I don't really want to get into that. I'll just say that the float usually can create a lot more volatility if it's a lower number. We'll just leave it at that, okay? And that's a pretty big factor when you're investing, because if you're buying into a spike or getting scared out of a stock on a drop, being able to identify that it has a low float, you're easily going to be able to say, okay, I knew this would happen, right? I'm not going to get scared out of it. I'm going to wait for the closing period here, right? I'm going to wait for the 4 p.m. bell, okay? So far we have the maximum number of shares, the total shares held, okay, shares available to the public, and then last but not least, and this is the one that could potentially be a big red flag, dilutive shares, okay? In the upcoming monthly issue, right, those of you who are Bowser Report subscribers know that we release an issue on the second Friday of each month, Okay, it's a paid penny stock newsletter for those of you who are unfamiliar with it. But we cover dilutive shares a good bit in the article, and we refer to it as fully diluted shares, and that's just adding it to the outstanding shares. But we're going to separate it here just so you get a better understanding. Dilutive shares are restricted stock units and shares that are held by insiders. Okay, so let's say the CEO of a company holds 1 million shares and its employees have 1 million RSUs or restricted stock units. Then there are 2 million dilutive shares. And what this is essentially saying is that at some point, right, because each one of these things has kind of a different contractual agreement of when they can be cashed out. Okay, at some point, these can be cashed out at a certain price over a certain amount of time. And in that case, that will dilute the value for current shareholders. So if this number is high relative to the other numbers that are here, right, then that's a big red flag. Okay, and we'll go over that a little bit more extensively in a second. But bottom line, right, insiders hold 1 million shares, restricted stock units of 1 million, right? That would equate to 2 million dilutive shares. Okay, so that's what could potentially dilute the pool here. Okay, and for those of you who are familiar with this, you guys probably already have it if you work a 9 to 5 or if you've worked for a big company. RSUs are pretty common. You probably own some and you might not even know it. But essentially how these work is that employees, when they hit certain milestones, whether it's actually making a lot of sales or making the company money or even just working at there for a certain number of years, they're compensated not only with a salary or a bonus, but also stock. Okay, so for example, the Snapchat IPO not too long ago, there were a lot of employees holding restricted stock units, and that's part of the reason the stock sold off so hard. Okay, so again, to go over this one last time, max, total, public, insider. That's how I like to remember it, just one word for each. All right, now let's use an example. Okay, and actually let's take company A as an example. So 20 million, 10 million, 5, and 2. You don't need to remember it because I have it all drawn up on the next slide here. All right, let me get this out of the way a little. All right, so I made a little chart here, and don't feel overwhelmed if you don't understand this. We're going to go through it one by one, right? Again, the authorized shares are the max. So in this case for company A, we have 20 million shares. All right, so each one of these green squares represents 1 million, and we have 20 in total, right? 1, 2, 3, 4, 5, 4. We got 20 here. Okay, so this is the maximum number of shares that are issued. All right, now the outstanding shares currently are 10 million. And you can see that I've outlined them in blue, right? But you can see that the float and the dilutive shares are both lower numbers, and they're both within this pool of outstanding shares. Okay. Now the outstanding shares is 10, so we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 million shares outstanding. The float, what's available to us, 5 million shares. 1, 2, 3, 4, 5. Okay, and the dilutive shares here are 2 million, to give you an idea. Right, 1, 2. Now, the reason why this is noteworthy is because what I like to do whenever I'm looking at any type of really quantitative analysis, right? So numbers, numerical evidence here. Whenever I'm looking at numbers, I always try to think of them proportionally. And a lot of you guys who invest in penny stocks are probably used to this too. Whether it's penny stocks or large caps, it doesn't matter, right? If I'm looking at Amazon, Amazon's trading up at $1,800 today, right? 1% on Amazon is a large dollar move, right? In comparison to a stock that's trading at $2, right? Because 1% on that would just be 2 cents. So proportionally here, if we're looking at 2 million dilutive shares, right? Out of that full 10 pool, right? That's 20%. Okay. For the float, that's about 50%. And that's how you have to think of it. And that's why I'm more of a visual learner, so I have to draw it out like this to get a good idea of whether or not this would be bad long term. Okay. So if we have a share structure that isn't necessarily a 5 float, 2 dilutive, and then 3 left over for institutions, right? If we have a share structure that's more so a 5 float, a 7 dilutive, and then however many left over, right? And the big picture out of the full 20, right? That's a big red flag, because immediately you can see that that dilutive number is very, very high relative to everything else. Okay, but the bottom line is, this is the max, all 20. All right, 10 outstanding, and you can see the float and the dilutive shares fit into those shares outstanding. All right, now to give you a better idea of how this works and really how it plays into the investment process, let's use a real example. All right, not company A, no hypotheticals here. We're going to talk about Tatron components, okay? And it doesn't really matter what you use for an example. I actually recommend to all subscribers, right? And whether or not you're a Bowser Report subscriber, doesn't matter. All investors, to go through one of your holdings and pick your favorite, right? Go take a look at your favorite, see if you can find anything fishy or anything good, right? Any positives or negatives based off their share structure by doing this exact same thing, okay? So again, the stock here is TAIT, that's the ticker symbol, all right? I went through their 10K, their annual filing for this data, all right? But there are a couple of ways you can gather this information, all right? Now, again, I mentioned something that you guys might not be familiar with, a 10K. That's the annual SEC filing for this stock. They're required to report all of this information publicly, right? So that's why you can go through this and find it. If you're unfamiliar with 10Ks, oh my God, this is going to be a pain in the neck. This is going to suck. Your first couple of 10Ks are going to be reading like just a massive encyclopedia that you don't even care about, okay? But the easier way to do this is just to go to Yahoo Finance or Morningstar or whatever and look up a couple of these figures. But again, I highly recommend going through the 10K because a lot of times those numbers are wrong. They're not entirely accurate. And I'll tell you right now, I looked at these numbers for Tate on Yahoo Finance, on Morningstar, and NASDAQ.com, all three of which gave me different numbers. So try to pull up that 10K if you can. But I took a picture of one of the sections on the 10K. What we want to figure out are the authorized shares, outstanding, dilutive, and float. Okay. This section was under shareholders' equity. I think it was on page like 23 of the 10K. Yeah, there are a lot of pages. That's just the beginning. But usually this will be under the balance sheet, the income statement. You scroll a little bit further down and you'll find this, okay, in the 10K. So I just screenshotted this section. And you can see that there are a couple of things that stick out right off the bat. And I'm going to put them in red, okay? First things first, we're looking for the authorized shares. So you can see Class A common stock. There are 20 million shares of authorized Class A common stock, okay? Now, this is an annual report, so they're going to show you this year's number and last year's number. So what we're looking at here, 20 million shares authorized, okay? And you can see the second thing that's listed here is outstanding. All right, so what I did first off, right, is I said, okay, there are 20 million shares authorized, so let me write that down here. Made a note of it. That's the max number of shares that can be issued. Then I went to outstanding, and we're taking the first number because it says December 2018 and 2017 respectively. So we're looking for the most recent number. That's 2018, so it's the first one. Okay, so that's 4.87 million. Let's just round it. 4.87 mil. Okay, so far, just by looking at Class A common stock, we can see that there are 20 million shares authorized, and then 4.87 million outstanding. Again, I looked at multiple websites. This number was right on one of them, wrong on two of them. So it's important that you look it up yourself. All right, you can see that the company issued 59,000 shares in this year, right? Not too important. That's not really that big of a number, but it is noteworthy. And then we have this section here, Class B common stock. And remember, we're only looking for two other figures here, dilutive and float. Okay, and really just dilutive from this SEC filing. So as you can see, it says there are 762,000 shares of authorized Class B common stock. And you might look at this right off the bat and think, okay, that's authorized. So let me just add it to the authorized number. Wrong. Okay, this is a different class of common stock. If you read carefully, it says our CEO is the sole beneficial owner of all the outstanding shares of Class B common stock. So what this is 760,000 shares that are owned by an insider. CEO is an insider. That's as inside as it gets. Okay, so what we have here, since we're doing everything in millions, right? 20 mil, 4 mil. What we have here is 0.76 million shares that are potentially dilutive. Okay, now keep in mind that these Class B common stock shares usually have lower voting power so that the CEO can't just take control of the company at any time. Right, the shareholders are still in power here. And on top of that, the CEO can own shares outside of this too. Okay, but the bottom line is, in this case, we have 760,000 shares that are owned by the CEO as Class B common stock. Okay, so what I did is I made a note of that down here. And then further on in the SEC filing, it shows us that there are about 100 and I think it's like 10,000 restricted stock units. So I just rounded that again. And what that gives us is 0.78 million dilutive. All right. Looking at the big picture here, that's not really a red flag proportionally, because this number doesn't really stick out that much in the sense that it's not the majority of the shares here, right? If this was 2, 3, 4 million, that's a little bit more concerning. And you should probably look deeper into the SEC filing, maybe even call up the company to see if that's something that's going to be an issue later on. Okay, but bottom line, just from this section of the annual filing, we have now defined the authorized, right, the max number of shares. All right, shares that are being held. All right, potential dilutive shares. All right, that's 0.78 million. And then the float you can get after a lot of research, but I highly recommend just using a website for the float. 9 times out of 10, these websites are actually going to be pretty close for this number, as they have to update it regularly because it's more relevant for active traders. And the bottom line is, right, that this float is fairly low. And again, there's no cutoff here for a low float. Since I'm an active trader and a long-term investor, I'll tell you right now, usually my cutoff is 10 million, but there's no standard out there. There's no unspoken investment rule that says a float of under 10 million is a low float. All you need to know is that this is relatively low compared to your average penny stock, and it's pretty volatile. Okay, it has high volatility. So just based off of this, we don't get any red flags from the potential dilution. All right, we can see that it has a pretty low share count, 5 mil. That's not that much. And then the float is about 3 million. So it's a fairly volatile stock. So again, why this matters if we're moving on to the conclusion segment here. All right, low float shows high volatility, as previously mentioned. Okay, you need to be aware of potential dilution. In this case, the dilution is not that bad, even if the CEO were to cash out a good bit, or even if those restricted units did get cashed out as well. Not that bad. But I will say, right, this is where it comes in. One of the more common units of measurement for a company's profitability is earnings per share, EPS. If you're unfamiliar with that, you probably shouldn't be investing. It's very common and very useful to see how much a company's making, right? How good its bottom line is doing. In this case, right, if we were looking at Tate's, T-A-I-T, right, that's the ticker symbol here, their EPS for the fourth quarter of 2018, right, or actually not fourth quarter, for the full year of 2018, then they made 29 cents, okay? If we factor in the potential dilution, they made 24 cents. And that's not that big of a difference. Proportionally, it's noteworthy. But if we're looking at the big picture, right, and we had a lot of dilution, and then this number was lowered to 10 cents, you're getting a lot less bang for your buck as an investor. And that could spell some trouble. Okay, so again, if we do have a lot of potential dilution, then that diluted EPS is going to be significantly lower, and you could see that there could be trouble down the road for you. All right, but just to recap, authorized, max number of shares, outstanding, total, float is available to the public, and dilutive could spell trouble, but that needs to be found in the SEC filings. If you do have any questions on any one of these terms or share structure in general, feel free to ask. Again, since I'm an active trader, I'm very familiar with all of these concepts. But as a long-term investor or even just intermediate-term investor, you need to understand share structure. So I'd rather you ask than just be left in the dark. Okay? And again, one thing I always say at the end of every webinar, try to do something concrete after this. Look up your favorite holding. See if there are any red flags or even just benefits to that overall share structure, so that you're prepared for the long run. Okay? And again, for those of you who are not subscribers to the Bowers Report, I highly recommend checking us out. It's a newsletter that is under $10 a month. We recommend long-term plays, and we also give a bunch of analysis like this that can be very helpful to your investment process. Okay, so thanks so much, guys, for listening. If you have any questions or comments, feel free to drop them in the comment section below, and have a good day.